first one up here, Tesla will be a leader when the inevitable shift to EVs happen. We're going to react to that one. I want to share my opinions and perspectives there. Let's get into this.
Ingenuity Managing Director, George Gianrikas. George, it's good to have you. Welcome back. We have seen a lot of numbers get cut. Redburn today suggested maybe flat to negative deliveries this year.
Cheers.
Why can't it get suppressed below 170?
Look, thank you for having me on. We went through multiple geographies during the quarter, tried to discern how bad demand was, how good demand was, and clearly things aren't perfect for Tesla. There's some weakness in China in March. But I think the one thing people have to appreciate is that much of the potential weakness in deliveries this quarter has to do with supply constraints. They've had some issues with making a new updated Model 3 in Fremont. And don't forget that the Cybertruck isn't fully ramped yet. We assume that maybe they'll make 5,000 and deliver 5,000 in Q1. And they have the capacity to deliver over 60,000 a quarter. So things aren't that bad. And actually, if you add those things back, it should result in year-over-year growth. So it's not perfect, but we don't think it's as bad as people think it is.
Are you a fan of the theory, and some have written this, that the price cuts have actually worked a bit?
Look, interesting question. They cut prices a lot last year, and clearly it helped volumes, and it's helping this year. But what's interesting, what we put in our note today, is that the price cuts haven't been there so far this quarter. I mean, maybe a little bit here in China and in South Korea, but overwhelmingly, the tone has shifted dramatically in price cuts. This quarter in the U.S., they actually increased prices 4 times, with another one due on April 1st. And some people have speculated that maybe to induce demand to get people to hurry to the website and buy a car today. But I think it's more than that. I think hopefully we'll see that result.
So a huge mistake I don't want to say everybody's making, but a lot of people are making in regards to Tesla stock. A huge mistake is they're looking at the business right now and they're saying this quarter is going to be a bad quarter in terms of potentially revenue or margins or whatever you want to look at, right? Or profitability, right? And so they're looking at then they're saying Tesla stock has to be low because this quarter is going to be bad and next quarter might not be that exciting either, right? But we know stocks are looking out to the future, right? And it's looking more and more like what I've been talking about is going to end up playing out for Tesla, which is margins are going to improve in the back half of the year, right? That's what I've been talking about. And I honestly think that's what's going to end up happening here. And I think more and more of Wall Street is starting to come to that opinion about, wait a minute, Tesla's margins could actually start potentially going up in the back half of the year. And therefore, if that's going to happen, you can't get the stock down just because the short term is bad. If the story's going to get a lot better 3 months from now, 6 months from now, 9 months from now, that's what Wall Street's really looking at the end of the day. Wall Street really likes to focus a lot on the next 6 to 12 months specifically.
Margin improvement throughout 2024, but also it may indicate that things might not be as bad as people think.
What's happening with your China estimates, though, after Musk complained last quarter about the competition and the subsidies from competitors?
It's a great question. So, look, in China, if you combine, we have data that comes out every week. It's publicly available. If you combine January and February, because there's some changes in the timing of the new year, we're actually up year over year. Where we think the weakness is probably in March. We had 3 weeks of reports. We got one yesterday, and those were down year over year. So there seems to be some slippage, and some competitors in China, NIO and Li Auto, actually pre-announced negative over the last couple of days. So China's not great, but again, they operate in multiple geographies, and there has been some pockets of goodness. Whether it's European numbers were good for the first 2 months, U.S. is probably not that bad, and we think that demand for this new Model 3 is actually really good. It's just that they haven't been able to make as many as they hoped.
I know for Q1 deliveries, you're looking at, you lowered to 420K, right?
Yes, correct.
You think the street's gotten conservative enough that next week might actually be all right?
Yeah, look, it's hard to discern exactly where the whisper is, but probably in the low 400 range, below the 420. And, we think that's the over-under. If it's over that, we think the stock goes up. And again, what we try to do a little bit is reframe the debate. It's a little bit of supply in there, too. We estimate about 95,000 units if they were at full capacity at the Cybertruck, full capacity of the new Model 3, and maybe 10,000 units out of Europe due to some fires at Giga Berlin.
Right, and I think you've still got a 2-handle on full-year deliveries, which not everybody does. Finally, do you see a lot of political risk if there's a change in the administration?
fair question.
Yeah, I mean, look, they do. Those EV subsidies do help Tesla. We think that the majority of people who buy a Tesla today are being helped by a $7,500 tax credit. That could change. We'll see if there's a new administration, and there's clearly some risk to that. But we think that over time, the inevitable shift to EVs is going to happen, and Tesla will be a leader. So there may be some bumpiness, but if you look, have you a little duration, they should be a winner long term.
Yeah. So I think what he brought up there is very important at the end. Very important what he brought up there at the end. The long-term shift to EVs, just because there's like a slower period does not mean it's not still happening. We watched that happen with smartphones where it was like, the sales growth was crazy, then it kind of flattened out for a little bit, and then it picked up again, right? And so I think the same thing's happening with EVs, and, we're in the midst of like a decade type transformation here, right? And, it was interesting. I saw somebody earlier was basically saying, it was in regards to Honda specifically. They were posting about Honda, and they're like, why is Honda so focused on profitability and trying to get to EVs? They should just focus on ICE. And it's like, you can do that, and that would be the more intelligent decision for the short term. But over the long term, it puts your whole business at a massive risk if you aren't focusing your business on what the next 20, 30, 40 years are going to be like, right? If you're only focusing on what the next 2 years are like, you're not going to be a company that's going to be around for very long. We know that. The old dogs get eliminated. All right, guys, let's get in this Tesla muscle one.
Tesla overseeing global sales as well as delivery and services, and now sits on the board of GM. Very good to see you, John. Thanks for joining us.
Nice to see you.
I was interested, big picture, first of all, on the kind of sales tactics we've seen out of Tesla in the last year or two, particularly when it's sort of quite high-profile tweets from the CEO to say, we're going to cut the price, it's coming soon, and whether that is only ever going to be a successful sales strategy in the short term and sort of undermines the pricing power that perhaps Tesla previously had in the long term.
I think it not only undermines the pricing power, but it also depreciates cars that people have already bought. And that's, I think, a bigger issue. Yeah. If you purchase a Tesla and the price keeps dropping and the value of your car keeps dropping, it could be below your loan. Mm-hmm. And that means people are upside down in their loans. And that means they're probably not going to buy a second car from that manufacturer. So you've got to be really careful in this industry around long-term pricing strategy and predictability for consumers.
So do you see that?
Yeah, no doubt. No doubt. I mean, there's a lot of people that are underwater on, just all of the Teslas in general, if they bought likely in 2021 or 2022. They're likely underwater in regards to their vehicle compared to, how much if they were to sell that vehicle today, what they would get for it versus their loan, they would have to likely pay to get rid of the vehicle, which is not ideal. And that's why definitely some Tesla customers have been mad, over the last bit of time. But, you got to do what you got to do.
Real sign of desperation or just short-sighted tactics or what?
I think this is, as they've said, this is to keep their factories humming. And so when production slows down in a factory, it can really affect your margins. And so I think the main goal here is for them to keep their factories busy.
What is the biggest source of competition now for Tesla, but more broadly the U.S. automakers, but the U.S. EV parts of the automakers? Is it the Chinese players? I mean, the quality of European EVs is really caught up from the traditional German names?
I think that's right. I think it's all of the above. So BYD is maybe the biggest competitor in the world. They've become the largest producer of EVs, and they're out of China. But here in the U.S., we've got now a wave of cars coming to market this year. They're very affordable. So you've got cars like the Chevy Bolt that are less than $20,000 after the incentive, and the Chevy Equinox that's less than $30,000, which is a SUV with more than 300 miles of range.
But still can't compete with those Chinese EVs in terms of price.
On a price point, that's exactly right, because there's a bunch of incentives and subsidies that the Chinese government helps their manufacturers.
This is a nice chart here. Global EV production, 2024, estimated share here, 15% U.S., 9% other, 54% China. Yeah, China. I mean, you live in China, you go to buy a new car, you're getting an EV. Like, there's not even like there's a debate. In the U.S. still, you go to buy a new car, you're still buying an internal combustion engine, right? Like the far majority, but in China, it's completely different. Europe, 22%. So that's the important thing that everybody understands is we're going to go the way of China over time in regards to EVs. 5 years from now, most people that go to buy a vehicle are going to go buy an EV vehicle. Like when they think I'm going to go buy a new car, it's going to be an EV within the next 5 years. And so that's going to be a big flip that's happening. And so that's just a little food for thought in regards to that.
And so that's an issue for all manufacturers outside of China.
Who's going to benefit the most from that? Think about that. Who's going to benefit the most? Tesla. Tesla's going to benefit the most. They are the EV player. Everybody else has to try to prove their product's better than Tesla. That's a big difference. Tesla's already the cemented king in the EV market. Everybody else has to try to no, don't get a Tesla, please get ours. And that's tough. That's tough battle.
To deal with. And policymakers.
Is GM rethinking the EV future that Mary Barra talked about, given what we've seen from the consumer and from competition?
I think, Goldman just published a study that more than almost 60% of consumers for their next car are considering an EV. We sold 1.2 million EVs in the U.S. last year. That's a $65 billion market already for EVs, and it continues to grow. I think we're going to have a rough first quarter in terms of sales data because a lot of the cars didn't qualify for the tax incentive, but that's now worked itself out, and I think we'll return to growth second through fourth quarters of this year.
You mentioned the weak residual value of a Tesla. Is that because of repair costs or just friction in finding a buyer for a used car?
It's mainly because the sale prices have come down. So if I paid $90,000 for a Model S 3 years ago, that car now sells for $70,000. And so that's the biggest driver of the decline in residual values. The repair costs are actually quite a bit less. Like I drive a couple of EVs. I haven't been to the repair shop in a couple of years because an EV motor has only one part. So there's not a lot to break in that car.
Yeah, what you said there, and it's just one of many advantages why, within 5 years, like the majority of people that are going to go buy a vehicle will buy an EV as the market gets more educated, right? The services is like a night and day difference, right? I mean, you buy an internal combustion engine, you got to, you don't want to say you always got to be in the shop, but you always got to be getting oil change, you always got to be getting this done, that done, fluids change. It's a whole process, right? EVs is very simple. And so, that's a nice thing. I mean, I've had it in terms of me actually personally taking a car in for service, and I've driven Teslas now since 2019. So, 5 years we can say, right? In terms of me actually having to drive a Tesla into a repair shop, I think that's happened twice ever. And any other issues I've ever had, which is just minor stuff, if anything, they've been able to just come to my house and do whatever needed to be done real quick and get out. But in terms of me personally, and that's in 5 years of driving Model 3, Model X, and Model S, right? So that's not bad. That's not bad. I can tell you, I would have been taking vehicles in for a lot more stuff than twice over a 5 year span if I've been driving internal combustion engines over this time. 100% in regards to that. Okay, so Tesla, they're executing. I understand it hasn't been the most exciting time. I still stand by my case that I think margins will start going back up in the back half of the year, and the story is going to completely flip in regards to that. Cybertruck demand is off the charts, and they're going to be able to sell every Cybertruck they want for years to go in the future. And so that's I think the big thing everybody's missing. Model Y, Model 3 are going to continue to be the high volume vehicles here for the next bit of time, and then we got Model 2 coming whenever that's going to come. But we're looking pretty good. Okay. Next one up here, Dan Ives. Tesla's going through a code red situation.
Partner, I don't know. It just makes me smile a little bit, Dan. You could be lowering your numbers because the stock's at 175 and your target's 315. That'd be a good reason. We'll get all your other reasons, but that's a good start, I think. But it's a little bit odd. You're going down $15 to 300, and you're keeping an outperform rating. All this sounds sort of, I don't know, too little, too late.
Yeah, look, it's obviously a great point. Look, we're bullish for Tesla on the other side.
Well, you must be, because you still have a $300 price target.
Challenging
what's that return from 180 to 300 is? So you're still looking for like a 70% return.
Yeah,
right?
and look, we've been here before. In other words, there's no doubt, and we call it out. This is a code red situation for Tesla. They are going through some dark days in China from a demand perspective. But Joe, I believe on the other side of this is a company, not just from an FSD perspective, but from volume that could start to get 2.5, 3 million vehicles per year as we go into the next few years. Our whole point here is you're in between two growth waves here. They clearly need to lay out a strategy for investors because this is going to be a rip the Band-Aid off delivery quarter next week. And there's no smoke and mirror about it. And, I think right now for Musk, I kind of view it as a fork in the road period to handle the investors through this.
You
hold your horses for just a flip and flapjacking moment, okay? I take a little bit of exception to Tesla needs to lay out the growth path forward for the company. They've done that. If you are not caught up on what the growth trajectory is and how Tesla grows over the next 3-5 years, you haven't been paying attention because they've laid that out now at this point in time, okay? Here's what we have going on. We got the refreshed Model Y and Model 3 now in the marketplace, right? On top of that, Tesla's entering new markets. We know that, right? On top of that, Cybertruck, right? Cybertruck, obviously low volume in the short term, is going to be much higher volume over the longer term, right? Huge benefit, and that truck could end up being extremely profitable for Tesla. We do know pickup trucks are usually among the most profitable. Ask Ford how they make their money, okay? That F-Series pickup line is ridiculous in terms of the profitability there, right? We've got FSD getting pretty darn far along at this point in time. People might debate whether it's done the next year, 2 years, 3 years. I can tell you it's sooner rather than later in regards to that, seeing the improvements they're making there. And assuming the AI continues to, be able to fix any last issues it has in the last 1% to 2% of conquering of driving here, okay? Then on top of that, you got the services opportunity, which is just really starting to emerge, and that number is getting bigger and bigger for Tesla, and it's going to start reaching some really large numbers here over this next few years. On top of that, you have Model 2, or whatever you want to call it, the affordable car coming in the market in the next couple of years here, right? Which is going to knock the doors off to the entry level, and that's just going to be brutal for anybody that wants to compete in that under 30K bracket. It's going to be absolutely brutal to try to compete with Tesla and in regards to that whole situation. So you've got the growth path there. I just laid it out for you. It's a bunch of different things all going for the company over the next many years. And so, it's just up for them to execute. And obviously, everybody and their grandma that sells EVs is all getting on the Tesla supercharger network, which goes back to the supercharger abilities, right? Oh, we got Semi. I forgot to mention Semi.
First quarter delivery.
Oh, the energy side of the business, which has actually shown very impressive numbers very recently. I forgot about that. Like we got the, like I said, if you haven't been paying attention, you wouldn't know the growth story around Tesla over the coming years, but it's all been laid out.
For Tesla, and we'll find out next week, but you expect it to be a nightmare quarter because of China and China demand.
Yeah, I mean, China, we originally had that up 3-4%. It's going to be down 3 to 4%. And the issue here, is just that Game of Thrones price war that's happened in China with EVs. It's hurt Tesla, and I think right now the problem is, do they continue to cut prices, or do they ultimately hold serve and focus on where demand could be? And I think as much as we talk about FSD and why we're long-term bullish, and I do believe we're sitting here a year and a half from now at $1 trillion plus market cap.
Yeah, so when we were up at 300 or 299, wherever it was, I get at that point, were you still worried about supply and you didn't see the demand issues coming?
Yeah, I think where we were dead wrong is underestimating just how bad China demand was going to be.
China demand.
So for us, when I look back, that's really what's caught us, I think, many by surprise in terms of just how quickly demands come off, but also with no adult in the room and with 2 disaster conference calls in a row, they haven't laid out guidance. They haven't given the strategy. You've had other noise.
No, baloney, okay? Listen, that last conference call was not a disaster. I can understand, fair point, on the previous conference call. That last conference call was not a disaster. It was not. I walked away and I thought that was a good conference call. In terms of guidance, okay, Mr. Dan Ives, you're Mr. Apple. How's Apple's yearly guidance been looking? Oh, they haven't been giving it, huh? Ever since Rona happened, they magically started taking away the guidance, right? So you can't say, oh, Tesla's not giving guidance. Apple does the same exact thing, right? So that's a bunch of baloney in regards to that. Like Apple used to give their yearly guidance, not anymore.
In terms of the AI issues with Musk, and obviously
Apple even used to, many times back in the day, they would give like guidance around how many iPhones they were planning on selling. That got taken away.
Where comp issue, which is added to it. But I think that's the problem. They haven't laid out the strategy to where investors right now feel like they're blindfolded playing darts.
Do you have a price target?
No, this is, if investors didn't really understand the game plan for Tesla, this stock would be trading at $79 today, not $179. The reason the valuations actually held up pretty darn well, considering everything that's going on in the business model, is because people understand the bull case I just laid out a few minutes ago and how Tesla gets to growth over the next several years and grows the company quite exponentially.
300, but do you think we're near a low here, depending on what happens next week?
I mean, I think right now a lot of the bad news is I mean, we wouldn't be bullish if I didn't think that this stock is
Why not put a buy on it then?
That is our highest rating.
Outperforms our highest rating?
Outperforming. It's on our top picks list. And I just view it as we've been through these white knuckle periods before over the years. This is another one now that we're hitting, and we're just calling it out, give out the strategy to what Musk needs to do in the conference call to get through some dark days.
He doesn't really listen, though, to we've seen when you ask him about how do you feel about criticism, he doesn't. He's going to do what he thinks is
got
right.
Nice Nikes on.
He's in a position to be able to do that.
No doubt, but I do think...
You said no adults in the room, but you think he'll return to giving the street what it wants in these calls?
Well, I think ever since they lost their CFO since August, there have been basically Nightmare on Elm Street conference calls. This, I believe, is a wake-up call from a demand perspective. And look, if they don't lay this out in terms of the strategy and turn this around, then you could not just have some darker days, but I believe a lot of investors will start to lose faith in where the Tesla story is going, even though we're in between two growth waves. And that's our whole point, is that this is a nightmare in the near term. There's massive growth on the other side. You need to handhold investors through it, no different than we've seen Jensen, Cook, and the others over the years.
Yeah, that's what Musk has done. And Tesla stock's doing pretty darn good. I'm telling you, if people didn't understand the growth trajectory Tesla has over the coming years, this company would be trading less than $100 right now. Look at Tesla's forward P. It's very high. Okay? The market cap's over $500 billion right now. The fact is, the fact that, you want to try to make a case that stock's supposed to be 300 or something right now is just ridiculous. I mean, we're trading at, in my opinion, once again, a pretty darn good valuation. Now, in terms of predicting, is Tesla stock bottoming here or not? My opinion is, sure, as long as the market is fine. But we got to be honest about this. If we got a 5 to 10% pullback in the S&P 500 for whatever reason, let's say inflation fears, I don't know, whatever, okay, whatever they want to throw out there. Tesla stock's going lower, okay? If we get a 5 to 10% pullback in the S&P, it would hurt Tesla quite a bit. And so that's just something we got to be honest with there, okay? All right, guys, appreciate you joining me. Thanks so much for being here, as always. If you're looking to apply to join my private group, learn from me on a deeper level, get access to all my course curriculums, 6- and 7-figure Discord chats, access to see the moves I'm making, which I made a bunch of moves in my public account here today, $2 million plus Fidelity account, then click on the pinned comment of this video, fill out an application, and we'll see if we can get you in there next week. Have a great long weekend, much love, and have a great day.